hoping, can everyone see, I'm sharing my screen, which has the presentation on it. I guess, can everybody see that?
I can, Mike.
Yep.
Okay, good. It should dominate the screen, so you should be able to see it.
I know of a few people that are still trying to get in. So if we could wait a couple minutes, that might be good.
Okay, yep, absolutely. Yeah, I know Buddy and his daughter and son-in-law wanted to join, so I haven't seen them come on just yet.
Hey, my name is Debbie, and I'm Buddy's daughter. So my husband and I are on.
Oh,
my son, hey there. My son is.
Hey.
He might be able to. He's an insurance agent in Alabama, and he's going to try to log on as well.
Oh, nice. Well, we'll give it about another couple of minutes here, and then we're going to go ahead and cast off, and we'll get started. Jacob Hammer coming on. All right.
Yeah, Mike, that's my son. There he is.
Oh, good deal. There's Mike Barber. He's on. So, we got a good showing here.
You can tell him my son is DH.
Okay. Jacob, are you on?
Yep, I'm here.
Okay, good.
Good evening, everyone.
Good evening.
Evening.
There you are, Mike.
Yeah.
Okay, one more minute. We'll cast off here. All right. Let's go ahead and get this thing underway. First, Jay, thank you. I really
Of course.
appreciate you volunteering to do this. The attorneys at Dunlap and Shipman had recommended you as someone that was very in tune to the insurance industry here in the state of Florida. And reading through your bio that I sent out to all the participants, that is very evident. What you do at the state level, what you're doing for all your clients, your HOA associations, your condominium, and then the software that you're certified in looks very impressive as well. I'm not familiar with that, so at some point you may want to kind of explain what that is.
Sure.
But again, thank you. Now, all of this came about because last year at our annual meeting, there was a lot of talk, which had more confusion in it than anything else. We were all talking about insurance and what each of us is trying to do. And the whole group was just all over the board on what we thought we had to do to keep our property safe. So the board came up with the idea of, hey, let's see if we can get somebody to talk to us, because most of us live out of state. So we're not as familiar with the laws in Florida. And we would like to be able to make smarter decisions when we're choosing insurance products. Mm-hmm. So having said that, I'm going to turn it over to you, and let's get the show on the road.
Perfect. So Mike, I'll kind of go through the slides here and answer the questions as you sort of sent them to me. Just a quick update kind of on the property insurance industry. I mean, you guys probably understand that that's where 90% of every condominium association, every town homeowners association, pretty much any property in Florida, that's where 90% of your premium is going to be derived. And that's where the main focus of kind of my discussions tonight will lie around. The property market in Florida is improving tremendously right now. I know that sounds odd, probably having been through somewhere in the neighborhood of 100 to 200% increases over the last couple of years, probably in your personal policies as well as most of my condominium associations, to be honest. The market has improved for several reasons. One is the capacity has increased within the market because investors have seen the return on investment over the last couple of years without any significant storms making landfall. Anytime you increase capacity in the market, it's like any other market. It's the law of supply and demand. If you don't have enough people investing in your product, it's hard to generate a profit. So basically, the larger investors in London looked at the property market at the end of 2022, 2023, and last year began to make large investments in capacity in the Lloyd's syndicates, as well as in private industries, as well as it relates to property insurance markets. So, and there are some new startup companies that have come into play in Florida that are capitalized really well in the reinsurance markets as well. Competition for market share, if you have carriers getting involved, becomes more aggressive. You're able to negotiate better terms. You're able to negotiate better pricing. And we've seen that over this last 18 to 24 months. It wasn't as prevalent last year as it has been since January 1 of this year, which is a large reinsurance negotiation time for property insurance markets. So the market has improved the end of last year and the first 6 months of this year. We look for it to continue to be good until we get into hurricane season, and then hurricane season will kind of foretell what we're going to see in 2026. If we have an active hurricane season and there's large losses, it hits a highly populated area or something of that nature happens, then obviously that's going to have a direct impact on the investors in the marketplace, and we'll see them draw back capacity as they pay losses and see where they land. If we have an inactive hurricane season, in the next coming months, and markets continue to enter the marketplace because they're seeing 20, 30, 40% return on investment, then the market will continue to improve into 2026. All indications are right now that the market is still aggressive, stabilizing a bit as we approach hurricane season. But if we get through hurricane season without damage, then we'll see it improve again. If you can go to the next slide there, Mike. Policy coverages are something that everybody really needs to be concerned about. When you're talking about coverage in Florida, mainly we all think about hurricanes. But as the market has tightened, what you've seen is a lot of people that used to write hurricane deductibles have gone to named storm deductibles and have gone to wind deductibles. And those deductibles all carry percentages. So if it's wind related, typically it's going to have a percentage deductible in Florida unless you get a named storm deductible or a hurricane deductible. So from the perspective of a coverage aspect, deductibles are a big deal in the state of Florida. What we've seen over the last several years was those deductible percentages that we dealt with on most of our condominium associations. Prior to 2018, we had deductibles that on average were 1% or 2%. Those deductibles went to 3% and 5%, and then to 5% and 7.5%, and some had as high as 10% deductibles as premiums escalated, and the ability of the associations to pay premiums was directly reflective of the deductible choices they had to make. Obviously, when you have those larger percentage deductibles, those percentage deductibles apply to total insured values, not to the amount of the claim. So associations with $10 million in value or $100 million in value, each 1% becomes an extremely large number. So the lower percentage we can, negotiate on your behalf that is affordable for the particular association, the better off your owners are going to be post-loss. In Florida, in condominiums, there is what is called loss assessment coverage. And that assessment coverage can also be utilized to pay down deductibles. So there's a mechanism in a unit owner's policy in the state of Florida that helps each individual unit owner participate in their proportionate share of any percentage deductible assessments that the association might have to assess. You guys being a townhome, each individual unit that you have, your percentage deductible is a percentage of your individual townhome, not a percentage of your neighbor's townhome or of the association as a whole. Difference between windstorm and hurricane damage. Wind is still wind damage no matter what the source. The only difference being that a hurricane may have a percentage deductible, and simple wind damage from a cold front that comes through the area and a tornado spawns off of it, typically your all other wind deductible is going to apply to that depending on how your policy is written. So each individual owner needs to look at your individual policy and determine whether you have a hurricane percentage deductible, a windstorm percentage deductible, or a named storm percentage deductible. So make sure that you've got a hurricane percentage deductible and not a wind or named storm percentage deductible if it's available. Says, does a hurricane have to be named for a claim to qualify under hurricane coverage? So if it's a hurricane, then your hurricane percentage deductible would apply, but wind damage is still wind damage, whether wind damage is derived as a result of a hurricane, a named storm, or a tornado, or just straight line wind. It's all defined the same from a coverage aspect. The only question is what deductible would be applicable, which is kind of what we just talked about. Is sinkhole coverage a concern for our area? In the panhandle of Florida, it's not really a large concern, but I always make sure that we negotiate that coverage on behalf of everybody we work with to make sure it's just included. Because if it's not a significant exposure, then they typically do not charge an additional premium to include it. So if I was an owner at your association, I would make sure my policy included sinkhole damage. Does lightning strike have to be named as an area of coverage? Typically not. It's always going to be in your basic perils coverage, but it is described typically in your homeowner's policy. It's going to be described in a condominium policy. It'll be described as lightning damage. But as a general rule, any basic policy is going to have lightning damage in it. Does mold damage have to be a separate coverage, and under what conditions is it covered? So yes, mold is a separate and distinct peril, and especially in Florida because we're so susceptible to it because humidity levels are so high. The real argument as it relates to this coverage is not as it relates to water damage, though. You'll find a lot of agents that'll tell you kind of, you need this mold coverage because if mold appears in your unit as a result of a pipe burst or whatever, then you've got to have that mold coverage in order for the mold to be removed from your unit. That's what we would call and what we would argue is an advanced water loss. So if you discover, if you leave your unit for a week, 2 weeks, whatever, and a pipe bursts and nobody notices it, nobody's in your unit, and mold is as a result of that pipe bursting, that's different than if you cut the AC off, left your unit unattended for weeks at a time and came back and everything in your unit was covered in mold. That's true mold coverage. Mold just grows in the state of Florida, and there's no cause that is covered elsewhere in the policy that causes that mold damage, then you've got an issue and you need mold coverage. Typically what you're going to find is it's very limited in the state of Florida. It's relatively costly. Most insurers won't offer more than about $25,000 in coverage for it, because basically a water damage loss is still going to cover mold damage as a result of that water damage loss. As it relates to pipes bursting or sudden and accidental water discharge within a unit, we can argue that coverage on your behalf, and any decent agent will argue that coverage on your behalf. Next slide, Mike.
Okay. Did it change? Oh,
Didn't
I'm sorry,
here.
didn't change.
That's okay.
There we go.
There we go. So are y'all in a flood
Yep.
zone? So the short answer to that is everybody's in a flood zone of some way, shape, manner, or form. It doesn't matter if you're on the highest peak in the Rocky Mountains, you're in a flood zone. The question is, are you in a special flood hazard area zone, which is when lenders are going to require it. And typically that means you're in an area that is more susceptible to flood, but you're still in a flood zone, whether you're in one of those zones or not. My recommendation to everybody is it's one of the cheapest coverages you can purchase, and I wouldn't be without it. The maximum you can buy through the National Flood Insurance Program is $250,000 of building coverage, and they've got special programs if you're in what they call an X zone, which is not a special flood hazard area zone. It's just we live in an area in Florida, and there are exceptions. You know, some people may tell you not to buy it, but my general thought process is, with what I pay on wind coverage, fire coverage, and everything else that I purchase, that's one of the cheapest coverages I can buy. So I've got it, and I'm not very susceptible. I've got a high elevation where I'm at. I'm in an X zone, but for about $400 or $500 a year, I can eliminate my fear of having flood in my home. So I do it. My suggestion is that everybody is in some type of flood zone, and 90% of the flood damage that's ever paid by the National Flood Insurance Program is paid on X zones, which are not special flood hazard area zones. They are zones where they typically are not subjected to, floods at all. But that's where the majority of the flood damage is typically done. Y'all saw what happened in North Carolina. A lot of that was, in mountainous areas where nobody ever dreamed something like that would happen. So I suggest everybody carries it. Even if your lender doesn't require it, it makes sense to carry it if you're in the state of Florida. When does flood insurance take effect versus fire or wind insurance? So flood insurance is rising water, period. So if it rises on the exterior of your property, i.e. rising water from rain, sewer backup, lakes, ponds, rivers, gulfs, whatever, if it's rising water, it is flood damage. Wind damage and fire damage obviously are specific to those perils. Your wind insurance is to protect against your roof blowing off, and any water that comes from top down is not going to be flood water. It's only rising water. And then obviously fire and wind insurance is basically the same policy. How much coverage should we have commensurate with fire and wind policies? I'm a certified building contractor, and I just can't keep up with costs, to be quite honest with you. What I would suggest and what I have, what's required in the state of Florida for condominium associations is that you have an insurance appraisal. There's a bunch of different entities that do that. The largest one recognized is Sedgwick, and they'll do insurance appraisals. If you guys ultimately decide to do something as an association to insure, they can determine values that are accurate and correct based on today's replacement cost values. But I can tell you, since COVID and out in the 30A area, costs have they're astronomical. and I remember building homes, we were all in for $95 a square foot. And now, I'm being told it's over $200 a square foot. So, I can't keep up with it. For my own consciousness sake, I think if I was you guys and trying to figure out how to do it as an association, my recommendation is to get an independent third party to give you an appraisal on it and give you an accurate replacement cost so that you're insuring the value and can replace the units for what you're told. What happens if there's flood? You have insurance, but your wall neighbor doesn't. Can half a townhome be rebuilt? That's an interesting question. My general thoughts are, being familiar with construction, there's typically going to be a firewall between those two units of some type. And I would assume that the answer would probably be yes. But I think if I was a member of the owners association, my suggestion would be that all owners be required to have a minimum of X amount of coverage on their particular unit at a cost per square foot or at a replacement cost developed by an independent third party for basic finishings at a minimum. Obviously, construction costs, and the two biggest things in construction costs are always going to be bathrooms and kitchens. Depending on the type fixtures you put in there, the type cabinets you put in there, there's cheap cabinets, there's high grade cabinets, Corian countertops, marble countertops, and Formica countertops. And then you got upgraded appliances in some, and the list goes on and on as to what goes in those two types of separate rooms. But those are always the most expensive in construction. So I think you could probably look at, what existed pre-upgrade for any particular owner and come up with something that would, at bare minimum, have owners be able to go in and replace their particular units. That's probably a difficult ask without sitting down with the guys at Dunlap Shipman and saying, how, what do you suggest to us? I've had some townhomes, and I know there's other questions later in this question and answer session about, would it make sense for us to reincorporate as a condo, or is there some other means to get to where we can all kind of pool our individual units into one association and purchase insurance as a whole? I would suggest that at minimum, you should be able to do something through your current bylaws and guidelines to better protect your owners. But I would suggest, discussions with the guys at Dunlap Shipman and try and figure out whether it remains a town homeowners association and you insure to Florida Condo Statute 718 as it relates to who's insuring responsibilities or what. But I think you put that out, the ability of an irresponsible owner to affect a number of other owners within your community. I think your bylaws, I think y'all are on the right track, that's the place where you protect all the owners and try and figure out how best to force owners to insure appropriately and be part of the community as opposed to simply insuring individually. So that would be my suggestion in regards to that. And that kind of eliminates that, can we build half a townhome back? Do you have to purchase flood insurance when you purchase your property, or can it be purchased at any time? So it can be purchased at any time. And the only issue is if you don't have it right now, there'll be a 30-day waiting period. There's always a 30-day waiting period with flood because they don't want somebody knowing that the dam burst upriver from them and they bind coverage that 5 days before the rising water makes it to their individual units or their individual properties. So they always have a 30-day waiting period, but you can purchase it at any time. Does having a flood insurance policy complicate the claim process? No, it actually makes it easier. What we typically see, and I've for hundreds of millions of dollars of claims, some including flood and some, just wind losses. But what we're able to do when we get into the adjustment process is we work with both sides of the fence. We figure out, okay, Mr. Wind Insurer, the roof blew off over here and water damage came in through, that section of the roof that blew off. And Mr. Flood Adjuster, it looks like the water line and, the bottom units got to X height. And so our general position is from this particular watermark down is going to be flood insurance. And from, here up, it's going to be wind insurance. And it helps us be in a position where we're not, where the flood adjuster and the wind adjuster can work cohesively together, and we're not arguing over who's responsible for what. And a lot of times what you'll find if you don't have flood insurance is an uneducated wind adjuster might say, this appears to be rising water damage within this unit simply because you had so much water inundate the property through the roof that it may cause rising water within a unit because it has nowhere for it to go. So they'll see water lines and stains within a unit and try to indicate that it might be flood insurance. And if we have that issue, and we've got a flood adjuster, we can say, hey, Mr. Flood Adjuster, this is what they're saying, and we can let them work that dispute out amongst themselves and come to an amicable settlement for our clients. The next one, Mike.
Okay.
What amount of coverage is appropriate in our area? What would it cost to rebuild my home? But again, back to what I stated earlier, I think I probably have a better handle on it than most would. And I would be extremely uncomfortable trying to tell you what would be an accurate insurance to value for your individual property. I would suggest that you have somebody in the insurance appraisal business tell you. A lot of times what you'll find, if you're insuring individually like most of you are now, your lender is going to require you to carry the amount of mortgage that you've got on your property. Those that have paid for their properties probably have a more difficult time trying to figure out at all what they should insure to. But bear in mind, if the mortgagee is requiring you to place insurance on your home and the value that you paid for it, that also includes land value. So you've got a hedge of protection there. If you're insuring to the value that they claim you have to have to protect their individual mortgage interests. So that might help some of you know what you may need to do. Replacement cost versus actual cash value. So replacement cost pays you what it would cost today to replace any damage that is done at today's replacement cost value versus the time that it was originally built. Actual cash value is today's replacement cost less depreciation. So if you have a life expectancy of a three-dimensional shingled roof that is, let's just say it's 20 years, and that a storm occurs at 10 years, then theoretically the actual cash value of your roof would be 50% of what the replacement cost would be. So that's how they would determine actual cash value in any loss. All of you, I would suspect, currently have replacement cost value on your individual policies. So replacement cost is kind of the standard, and 99.99% of insurers write replacement cost versus actual cash value, unless you can't find somebody due to the age or the underwriting characteristics of your individual buildings. And then some will step in and say, we will only write it on an actual cash value basis. I suspect that you guys have replacement cost coverage pretty much universally, which is what you want. Are there any discounts available as it relates to storm shutters, hurricane glass? Yes, there's discounts for all of those things. Leak detectors, security systems, they all provide discounts. Most important being your roof first. That's one of the most important indicators on what insurance companies look at as it relates to overall underwriting characteristics of your individual structure. The newer the roof, the better. That's the first thing they want to know about. Then they'll want to know about your opening protection, whether it's your doors and windows or any other means of entry into the unit. So they'll want to know whether you have impact resistant doors and windows. They're going to want to know if you have, skylights, are those protected? The roof itself. The things that are most important to an insurer are basically the shell of your building. Anything that allows damage to the overall exterior structure of the building and thus wind damage to the interior of the building. So roof being first, then all of your doors and windows. If they're protected by shutters, that's important. If in a perfect world, they would prefer hurricane impact resistant doors and windows, Class A, which means basically Miami-Dade code standards. That way, they're not worrying whether or not you've placed the shutters on the exteriors of your individual buildings pre a storm making landfall. They know it's protected 24/7, whether or not your shutters are up or not. So that's where you get the most protection as it relates to those items. But again, if I had to select one item out of all of those, my first guidance would be the newer the roof, the better it's reviewed as it relates to underwriting characteristics. Do I need ordinance or law coverage? Absolutely, yes, you do. Ordinance and law coverage has basically three different elements. It's got coverage A, coverage B, and coverage C. Coverage A pays you for the undamaged portion of the building. So if let's just say we've got a building that's valued for mathematical simplicity at $100,000, and the adjuster comes in and says, look, we've determined that we've got over $50,000 of damage to this building. So it's over 50% damaged. And the county comes out or the city comes out, whoever's the local building authority comes out, and they look at it and they say, yeah, this building is well over 50% damaged. And from personal experience, they will work with you very closely in that regard. The last thing that most local building departments want to do is tell you you have to tear your building down. If they can figure out how to help you reconstruct your building, they're going to do that. But at some point, they do have to tell you that it's unsafe or it will not meet code in any way, shape, manner, or form if we allow you to rebuild and it's well over 50% damaged. So then the insurer is going to look at that building and it's going to say, look, it's only 50% damaged. We only owe you 50% of what you've got it insured for. If you don't have ordinance and law coverage, all they owe for that $100,000 structure is $50,000. But if you've got the ordinance and law coverage, then the undamaged portion of your building has to be paid for as well. And then coverage B is where you get your demolition coverage. So demolition of that undamaged portion of the building needs to be paid for as well. So coverage B would be included there. And then coverage C, if the local ordinance and law requires you to go back with hurricane impact resistant doors and windows and you didn't have them pre-loss, then that coverage is going to come in and pay for you to have those new hurricane impact resistant doors and windows installed in your structure. It'll pay the difference between the replacement cost of the non-impact and the new impact resistant. So yes, ordinance and law coverage is extremely important, especially in the state of Florida. Knowing how many changes there have been to the law over the last 20 years as it relates to impact resistant facilities in coastal communities. So it's important. What happens if my insurance company goes out of business? So there's two scenarios here. If your company goes out of business and you don't have a loss, that's one thing. If your company goes out of business in the midst of a loss, that's another. If it simply just goes out of business, you're probably going to lose the premium you've paid in to date, and you're going to have to seek a replacement carrier. That's generally how that's going to work. Most of them will not, quote, run off your existing business. They'll allow your policy to expire and tell you they're going to be non-renewing all the policies in the state of Florida. But if they physically go out of business and are determined by the Department of Insurance not to be able to pay claims and they shutter them and take them over, then the Florida Insurance Guarantee Association, if they're an admitted carrier in Florida, will pay up to $100,000 per door, i.e. per unit, in the event of a claim. If they go out of business in the middle of a claim, then if they're an admitted carrier in the state of Florida, you've got that 100,000 protection, but that's about it. And I can tell you, it's a nightmare scenario. I have not been involved with one that went out of business post losses that I was working, but I have stepped in and tried to assist associations that have asked for my assistance post loss with carriers that have gone out of business, and went to the Florida Insurance Guarantee Association, and their office was smaller than my agency's office, and files stacked everywhere, books stacked. I mean, it was a nightmare trying to get them their $100,000 per door, and eventually having attorneys involved over 4 or 5 years, they eventually got a partial settlement out of FIGA, but it wasn't $100,000 a door. So it's a very difficult process. You want to be doing business with A-rated carriers in the state of Florida. Quite often, excess and surplus lines carriers I recommend to my clients before I'll recommend some admitted carriers in the state of Florida, just because of the financial capacity that we're looking at. Lloyd's of London is a far better market than an admitted carrier that got their startup funds by taking policies out of Citizens, which is what you see a lot in the state of Florida. Do I need coverage for short-term rental and loss of income if I plan to rent? Number one, you need to make sure that your individual policy underwriter, your carrier, understands that you're renting your property first and foremost. And yes, you should have a loss of income included in that policy, which basically will be a loss of use coverage is what it's typically called in a dwelling fire policy, which should be the form, if you're renting it, that you'll probably be written on, which is similar to a homeowner's policy, but more designed for rental properties. Next screen, Mike.
Okay.
Who do I contact in Florida if I have a complaint against my homeowner's insurance? You've got both of those absolutely correct, Mike. Department of Financial Services is who you would reach out to, and myfloridacfo.com is their website. That's who you need to contact. Not only in regards to that, but agents, they handle all of it through the Department of Financial Services. Any insurance complaints at all go there.
All right.
Do we have the owners
I
of?
think, yeah, Alex, I didn't see if you came on the call or not, or Brian. I know Alex said she would come on, but I'm not sure if she's here. Well, let's, if nothing else, I know that they struggled. Yeah. Jay,
I mean,
if you've got some experience with that, go ahead.
Yeah, I mean, it's a difficult process. I mean, I tell my clients all the time, but truthfully, the policies are only as good as the agent servicing them. In this scenario, you could have agent A doing one and agent B doing another because of this being a town homeowners association. And so proximity of the properties and being wall to wall beside one another is going to lend itself to this, where you have one adjuster probably in one unit trying to subrogate possibly. I mean, I don't know what the cause of the fire was. It a lightning damage claim, Mike, or was it?
Yes.
Okay.
Yes.
All right. So theoretically, the damage is the damage in both of these units. And theoretically, the adjuster for each unit would have worked with each individual policyholder separately and come up with estimates within the confines of each individual unit and paid the loss based on their agreement with the insured. And the common wall, in theory, probably should have participated, both policies should have participated in that. But you're only as good as the agent that is handling your policy, and being able to show the individual adjusters kind of the bylaws and docs of the association and what's handled by the association, what the insuring responsibilities of each individual owner becomes important. But not only that, having a relationship with the adjusters that show up and being able to walk the owners through the process with them. A lot of times what you'll find especially in large loss scenarios at owners associations, is a lot of agents are scared from a liability perspective. They're scared of an errors and omissions claim by saying something that may be inappropriate as it relates to loss settlement. And so what you'll find a lot of times is agents don't like to get involved in claims. They like to give you a 800 number to an adjuster's desk, and here the assigned adjuster is Fred Wilson at Sedgwick, and here's his contact information. You need to be communicating with the adjuster. But dealing with condominium associations for us is quite different, and we have to have a service arm, that gets involved on the claim side and helps our individual clients on the claim side to resolve issues post loss. And we think that's kind of where the rubber meets the road. And so I would think that if there were any issues that were suffered, by either one of the owners here, and what the difficulties were with one owner having X insurance agent on one side and one owner having Y insurance agent on the other side, and then two different adjusters post loss as opposed to one, I can see where that would be a nightmare, and where it could create coverage issues. And when I say coverage issues, one individual adjuster maybe not agreeing to do something inside one unit that the other adjuster agreed to do in the neighboring unit. And so each may have approached the loss quite differently based on the adjusters that showed up. So,
yeah,
I don't know if that really answers the question.
Yeah, I do. Well, it does. What I know that happened is that one of them had a Lloyd's of London, the other one had a market policy. Actually, the market policy responded better than the Lloyd's of London. They at one point they didn't want to do the Lloyd's of London. I think only wanted to do part of the roof, and the other agency said no, that roof needs to be completely replaced. And so now you've got now you've got a townhome with one side has a new roof, the other side has a patched roof. It took a while to get those kinds of things to resolved. So yeah. Oh, actually, Alex, I think just came on. Oh. Alex, you there?
Yes, I'm so sorry. I got stuck at a job site and traffic was a nightmare. So I apologize, but I literally just walked in the door. So.
Perfect timing. Okay. Yeah, and we were just talking about what Jay just briefed us kind of on what he knew about these types of things. But if you wouldn't mind sharing a little bit on that, that would be wonderful.
Yeah, the difference between our policy versus what the Comers had, we have a surplus policy. And the reason why we had procured that is at the time when we bought, or we had been dropped by several different insurance companies. And so we had, for no reason other than they were no longer insuring in Florida. So our agent was able to procure this policy through Swift Insurance. Blair and Company is the underwriter, and then I'm sorry, Blair is the adjusting company, and then we have Lloyd's of London as the underwriter. So the problem with our policy is that, first of all, it requires so much work on my part because we had to identify, first of all, they didn't even have an emergency number to call when the fire happened. I literally had to wait until Monday to talk to somebody at the company when it happened on Saturday morning. So that was my first red flag of this is not good. And even though they claim that they are the elite and they are the creme de la creme of insurance companies, it has been a disaster for us because they require so much documentation. They do not just, assess values. They do use the Xactimate software to ensure, that square footage is all allocated for. But we had to fight with them on everything because, and we're still underwater at this point, with what they have given us versus what we have spent. And so it's very different from a commercial policy in that we have to do everything in stages and submit receipts. And then it has to go through the adjuster and then it has to go to London to be underwritten, and then it comes back. So it just is a very long lag time. We've actually been through 2 different adjusters or 3 different adjusters because of, either I felt like it's the 3 Ds. I don't know if that's facts, but it has just been very, very difficult and not timely at all with their responses and a lot of work. And I literally just spent almost 4 days. They want every single receipt and every item that we have spent, they are reviewing instead of just allowing us to do it, just giving us a lump sum based on Xactimate.
Right.
They will review every single receipt, and we had to put it all, in a spreadsheet. And it was just, so I don't know. I would not recommend doing a surplus policy though at the end.
Yeah, I think that goes to the last question. What will you change in your coverage going forward?
Not doing a surplus policy. And I don't know if this is common, but I think that when DeSantis, I believe that he, signed some action that insurance companies had to start insuring again in Florida. So I think the market is bigger. And I'm sorry that you might have already addressed that at the beginning of the call, but that was definitely something that we did not have the availability for. And honestly, we had not used our insurance until this happened. So we didn't really shop it, because we didn't know how this would go.
Right.
So there was a bit of ignorance on our part. Luckily, we had not had to use it until now, and never again, though. Never again. And the thing was that, what took so long on our job was the roofing company. And because Comer's policy, they had a roofer immediately, come and bid the job. Seemed like a legitimate company that, had quick turnaround. Well, that ended up taking almost 5 months for just the roof itself.
Wow.
Actually, it was longer than 5 months, almost 6 months. So that is what started this whole just roll of, just really, really difficult. Plus we had a contractor that totally stole from us and did not do what he said, so that we had to fire him and get another contractor. So we did not have the best luck either at the beginning. So
yeah, I'm bless your heart. I went through Hurricane Michael and I'm sitting here shaking and trembling, having memories of
yeah,
a lot of the same difficulties with I had Frontline. I went through 4 field adjusters and 3 desk adjusters with Frontline, which is one of the better carriers in the southeastern United States. They had a bit of an excuse because, it was such a bad disaster after Hurricane Michael. They just didn't have enough qualified adjusters that, on and on and on.
right.
But, here I am, an insurance agent, a certified building contractor. I'm certified in the Xactimate adjustment software system, and I can't get my claims. I stayed in my brother's house for over a year trying to get my home rebuilt. I mean,
Yeah.
of course, my main focus was my clients, so that was part of the problem. And I wasn't staying on top of my contractor. And hearing you talk about your contractor, I had similar experiences, especially
Yeah.
with the roofing contractor.
Yeah.
But I wish I could say it's a perfect process. It's not, and you are so dependent upon the field adjuster that they first send out. And
Correct.
in theory, a one-off loss like a lightning claim should go so much smoother than a catastrophic loss where there's, hundreds of millions of dollars in damage or billions of dollars of damage in a particular county or community, So I'm not making excuses for the way your claim was handled. Typically what we see, one-off losses like lightning claims, they're going to require some receipts, and they're going to require you, but and you do, quite frankly, have to be in a position financially a lot of times to just proceed, and get the work done
With the
and
money,
submit
and then,
the
yeah.
invoices and just say, this is what I spent, period. And
Yeah.
that's what I expect to be paid,
Yeah.
and then a lot of times that puts you in a heck of a lot better position from a negotiation standpoint to be able to go back to not just the field adjuster you're working with or the desk adjuster you're working with, but if it comes to hiring an attorney, you can say, look, this is what I spent, and now I'll pay you to get this loss settled, but I want you to recover your attorney's fees too,
Right.
and you're absolutely correct. I don't know how many people are familiar with the 3D concept that she's talking about, but that's delay, deny, and defend. And it is shameful in our industry how many insurers take that path. Their goal a lot of times in large loss settlements is to delay and deny and defend until they just wear you down.
Yeah.
And try to put you in a position where you can't afford to fight the big guy. But at the end of the day, 99.99% of the time you will win. But you have to be, unfortunately, in a financial position that a lot of people aren't. And I don't know what people do that, can't afford to fix their own damage and then pursue the insurer. Those folks are left in a position where it is very hard for them to not just accept what the insurer is trying to cram down their throat, to your
Right.
point. So,
And another thing that I want to bring up, just, I pray that nobody has to go through what we had to, but the whole aspect of depreciation, there is recoverable and non-recoverable depreciation in a claim. And the recoverable depreciation is supposedly, going to be given to us at the end. And this is where we're underwater still, because
Yep.
we're hoping that we get paid back for that recoverable depreciation. But where this whole deny, delay, defend, I went through that Xactimate estimate with a fine tooth comb, and to find out that kitchen cabinets that were only a year and a half old and all my appliances were a year and a half old, they had taken 60% depreciation on those, even though I had provided them with the receipts from a year and a half ago of all those items. And so you just have to be, I feel like they bully, but you have to bully back, and
That's right.
it's really, it's sad, and it's not fair, and it makes you, you want to be kind and you want to be collaborative, but the
Yeah.
way that they treat you on that, you have to just prove everything. And the amount of communication, it was seriously a part-time job, the amount of time that I had to spend. And luckily, I've been in construction for the last 12 years as a project manager. So it was pretty easy for me. After we had to fire the contractor that did absolutely nothing on our job, I moved down there for a month and I GC'd it. Even though I hired a GC, I was there on site every day to ensure that, what the trades were supposed to be doing, that they did. And that's another thing. It's like, I feel bad for the Comers because I know that they're not able to be down there, and that's why theirs is taking so much longer, and the change orders weren't executed as they had requested. And So it's really hard when you're remote, to try to get a job completed like this, being out of state. It's hard,
Great.
I would
Thanks,
agree
Alex.
with everything you said, Alex. I absolutely agree.
Yeah. And the last thing about the roof, we went with the Comer's insurance company. They have Olympus, and they basically said, this is our preferred vendor. And because we had to do the roof at the same time, my insurance company allowed us to do that, and they don't have any preferred vendors. They just they make you do all the work. And that's the difference between the surplus policy and their standard commercial policy, is that because they have preferred vendors, ours doesn't. So, and we kind of got to ride on their coattails, but it of course ended up being an absolute nightmare, since it took, I guess we got our roof in December. So that was 6 months. So.
Part of what we do too, Mike, and just for the owner's benefit that are on the call, but part of what Alex just hit on, it's extremely important to have vendors in place post-loss. We, through our Condo Shield program, I think that was mentioned in some of the qualification stuff I sent to you. We have our, what we call our Hurricane Emergency Response Team. We've got pre-qualified vendors, 90 something strong all over the country right now. Mitigation contractors, roofing contractors, HVAC contractors, general contractors, period. And, we require a few things of them. They've got to provide us with certificates of insurance. They've got to make sure that they're on our jobs within 24 hours after the wind blows, if assuming authorities allow them to be there, and they have to work for insurance proceeds only, plus any applicable deductible. So that's, those are the qualifications that we require of all the vendors that work on our behalf. And so that is, to her point, it's extremely important to have leverage over a contractor that steps on your property. And it's hard for an individual owner to have that leverage. These guys have worked storms with me for decades and made hundreds of millions of dollars. And when you can use that leverage with them, I've had mitigation contractors drop off equipment at condominium associations that we insure and not charge them for it because they have, on-site management that knew how to place them in certain rooms and get the rooms dried. And they would drop off dehumidifiers and, air circulation equipment and leave it with them and not charge them for it. There's not many mitigation contractors post, a catastrophic event that'll do those kinds of things. So, having leverage with a contractor is important as it relates to trying to get, a claim settled. You need somebody arguing on your behalf. And if a contractor knows they have to work for insurance proceeds only, they're going to argue and they're going to present it in a format in which that insurer can put a rubber stamp on it as best they can. I'm not saying that they're perfect. I mean, I've had contractors have to sit down in front of boards where we had $35 million in losses at a condominium association post Michael, and they had to sit down with them and explain that the only way to get the final settlement done was going to be for them to place a lien on the property, and for the board to in turn tell the insurers that lien had been placed and that they would continue to allow them to, have units sold within the complex, and they would release each individual unit owner's unit from that lien. But until the insurer agreed to settle, they were going to have that lien on their property. And then eventually they ended up paying attorney's fees on behalf of the association to pursue them in court. But we eventually got the claim settled and everybody walked away happy. So I'm just saying it makes a difference to be able to have leverage over a contractor, and it makes a difference having that contractor work for insurance proceeds only versus, have you sign a contract and hope you can get it back from your insurer. So,
yeah. Jay, I may have missed it at the first of what you were saying. Is that an agency thing that you do, or is it yeah. So
yeah,
it's
it's
something
specific to us.
your agency does.
Correct.
Got it. Okay.
Correct.
Okay. All right. Great. Thank you.
Let's see.
All right. Can
Additional
we
questions?
move on to some additional questions? Yeah.
What is the forecast for the coming years and what is the state of Florida doing to mitigate costs? So I think Alex mentioned a few minutes ago, Governor DeSantis, and the legislature, I sit on the legislative task force for the state of Florida. We've passed some really good legislation in Florida as it relates to attorney fees and as it relates to PAs and what the industry thought. When I'm saying the industry, I'm talking about the insurance industry. What the insurance industry felt like was a deterrent for them to continue doing business in Florida. That's had a huge impact on insurers wanting to come do business in the state of Florida. And it's been very good for the overall marketplace. That, along with not having any storms make landfall in significantly, dense populated areas in the state of Florida last year, has driven the market and is continuing to improve. And if, as I mentioned earlier, knock on wood, if we can get through one more hurricane season where we don't have significant damage around the state of Florida from a hurricane, I look for the market to continue to improve. But just this past year, we've probably, on average, delivered to our condominium associations somewhere between 20 to 60% decreases in premiums, just depending on their year of construction and mitigation characteristics and the particular loss history of each individual association. But at minimum, this past year, most of our associations, we were able to get premiums reduced and improved terms by reducing deductibles and broadening coverage, and still delivered 20 to 30% decreases, and some, as I said, as much as 60 to 75% probably. So I'm not going to read that whole next question, but there's discussion, I guess, from a board perspective and an owner perspective at the association as it relates to, do we reincorporate as a condominium and use the overall association insurance to value and the overall association property and try and drive, costs down for each individual unit owner as a result of insuring all the properties as one entity? I would say on average that probably, and especially you guys, there's a lot of activity in the condominium world, as you know, probably as well, in the state of Florida from a legislative perspective. After the Sunrise collapse, there have been, that drove premiums higher for condominium associations. There's now what they call SIRS reports, structural integrity reserve studies, and some other legislative aspects in the state of Florida that have taken place that have been detrimental for older condominiums to figure out how to fund their reserves to maintain their structures appropriately. You guys, looking at the photo of the damaged unit earlier, that SIRS study and the changing in the way the reserves have to be funded, I don't think would apply to you guys because it only applies to 3 stories or more buildings. Actually, it may be four stories or more. So I would communicate with the guys at Dunlop Shipman and let them know what you're thinking of doing. And if it's not available to change the docs in the owners association to have only the insuring requirements of your current bylaws and documents changed to reflect that you want to insure as a condominium in the state of Florida, but operate as a townhome owners association. If that's a possibility, that may be more cost effective and still get you to the same position that you're trying to get to. If that's unavailable, then I would suggest to you that it certainly is more efficient from a cost standpoint, from a negotiation standpoint, and for all the owners. And it would help from a claim standpoint too, to work through the issues like Alex just described. But I would be cautious and make sure that they understood at Dunlop Shipman, the end goal is maybe not to reincorporate everything if it's unnecessary, but that you would like to pursue whether you can remain a town homeowners association, but insure as a Florida condominium, and see if that's an availability or not. The other thing I would suggest probably before you take the step is that maybe y'all send me 2 owners in one building, send me their current homeowners and or dwelling fire policies, whatever they have, and let me find something that is similar in nature as it relates to year of construction, type of construction. I'll find a condominium in the same geographic area and share with you guys what the rate is per 100 and what the deductible terms are, and correlate that into what it would cost you for that individual building before you go through all these machinations of seeing what attorney's fees you would spend and all of that. Let's make sure that I'm correct on my end and that it would be a cost savings mechanism for you and not simply a better tool to control how everybody insures. I mean, if it's not cost effective, it's not going to be worth pursuing. So let me research that on my end. If y'all can send me a particular building with a total insured value that we'd be looking for that building, and then the 2 owners that are within that unit, what they're currently paying each year and what their deductible terms are. Does that make sense?
Jay, I
Yes.
think that my owner and I are insured with the same companies, and so it might be easy for us to offer that up to you.
Okay.
Yeah.
So you'll reach.
I
Does
can
that-
reach
I mean-
out to you separately. This is Christine.
Okay.
And I can reach out to you separately because I do believe our building is insured by the same companies.
Perfect.
Can't tell you the exact limits because we haven't compared policies, but I think that would be easy enough to do.
Right. And what we can do is just round it up, to the nearest 100,000 and compare, or whatever we want to do to try and compare apples to apples, so that you would be in a position where you can see whether it makes sense or not. So, I don't want to put y'all through an exercise in futility. If it doesn't make sense to do this, I would think if premiums and terms provide savings, premiums for similar terms provide savings, then obviously it's a no-brainer. If they're about the same, it begins to be questionable whether it's worth doing for the attorney's costs, unless we want to be more in control of what our expectations would be post any catastrophic loss. So,
Well,
I think
I think that is a question, Jay. Like, so let's
Yeah.
say that part of our community, or maybe our whole community, experiences a loss, and then individually, as we are experiencing a claim, how does that work? Does each individual homeowner get their own adjuster that gets to, or is it as a, let's say we go to a condo kind of a situation, do we have one advocate or adjuster for the whole community, and then how does that
I wish
relate
we
with
could
to
call them an
individual
advocate.
owners?
Yeah.
Well,
Yeah, it would be one adjuster. Yes. And to your point, that in and of itself is a huge advantage. I'm not trying to say that it would be a huge advantage from a claim settlement standpoint, but it would be a huge advantage from a perspective of everybody's going to be treated the same. And it helps us from a claims negotiation standpoint. It helps me when I'm communicating with the board to be able to set expectations. If I think a claim is going south, I'm working for you guys. I don't work for the insurers. I work for you guys. So I'm going to be able to get in front of the board, and I'm going to be able to say, look, this guy's from Minnesota. He doesn't understand Florida condominium statute law. He doesn't understand who's responsible for insuring what. He's, this guy's a nightmare. We need y'all give me 60 days to figure out what I can get out of them. And then we need to start talking to a public adjuster after that. I mean, so, and that's one of the questions that I think is in later in some of the slides is what are advantages of a PA? My personal opinion is there's good insurance agents, there's bad insurance agents. There's good public adjusters, there's bad public adjusters. There's good doctors, there's bad doctors. There's, whatever profession it is, there are good ones and there's bad ones. So I know good ones, and I know which ones that I would recommend we get involved if we can't get where we want to get and the board is in disagreement with an adjuster. What I always tell my clients is give me the opportunity to work with the board, the adjuster, and the contractor until we reach an impasse. And I'll be the first to tell you when I think I've reached an impasse. And then let's have discussions on what's in the best interest of the association going forward. And let me hold your hand and introduce you to, a public adjuster or two, and I'll bow out of the process and we'll let them pursue the claim. But recognize that the moment we sign a contract with those guys, we're giving them 10% of the proceeds that they recover. So that's why I always want to pursue the claim as long as I can, get the recovery that I can get, and then let's have a discussion with a public adjuster. And you're only paying for what they recoup over and above what you've already recovered through me.
Okay. I do have a question. Do all policies have different, separate categories as far as what your maximums are? First of all, the general liability, then loss of use, personal injury, and then contents. That's how ours was set up. So I don't know if that's everybody's, but we basically.
Yeah. Typically what you see is that those amounts of coverage are all determined as a percentage of the total insured value of the structure. So whatever the value is of your individual unit / townhome, that is coverage A, and then coverage B most often will be other structures, and it'll be like 10%. And then your coverage C is your contents. That'll be like 50%, sometimes 60 or 75%. And liability, that varies on what you want. You can have 300,000 or you can have up to $1 million typically for liability purposes. And then your loss of use, I believe, is typically 10% of your coverage A. It may be 20, depending on the carrier.
Okay. I have to look at ours and see, because I didn't realize it was set up as percentages, but that was another major portion, loss of use, that they really, really were difficult with us working. I mean, trying to get money out of them for loss of use was hard.
Yeah, they typically will want you to prove what your prior year's rentals were and show them reservations and
we did all that. I mean, the amount of work was unbelievable, and we did all that, but they still didn't. That's the thing. They still don't even, because we had, I think in our loss of use, we had like $80,000 or something, 70,000, and it was unbelievable what they ended up giving us. And we've had to fight for every penny of that. Even though we have documentation, we have 3 years of rolling rentals that way superseded what our loss of use was. And they gave us a fraction of it, unfortunately.
Wow.
Mm-hmm.
John, it looks like you have a question too.
Yeah, I think somebody was ahead of me. I think number one there on his hands raised.
Oh, I'm sorry.
Yeah.
That's that was the Mulhollands. They went ahead. Yeah, you're up now, John.
Okay, me.
Yeah. Yeah.
Okay.
Yeah.
Well, Jay, I hear what you're saying. And that might, and combine this together, has some benefits potentially with premiums and so forth. There is some complications to that. So I don't want to group to think, oh, that's easy, we'll just switch that and we can all get the same
Right.
insurance. First of all, it starts off with how we're classed and with townhouse or whatever, because I've seen on some of our deeds that we're classed as attached single-family homes and not townhomes. And then, of course, we're not a condominium association, so that's one. So you've got attorney's fees. There's also the difference in values up and down the street. And that has to do with either what they would all appraise for, but it has to do with some with location. It has to do with some of what's been done on that particular unit, whether that unit still has original stuff in it or whether it's
Exactly.
been totally updated. So I don't want it to seem as simple as you tend to make it, because I don't think it is. I think there are more. I'm not saying it's not worth looking at and we shouldn't look at it, because we ought to look at everything. But I think just to say, hey, we'll just go together and all get a policy, I don't think that works under just that.
I would agree with you,
broad
John.
thing.
That's why I prefaced everything I said, with checking with Dunlap Shipman, and I recognize I am not a fan of paying attorneys, but I, and I don't want you guys to. I mean, I think the first thing to look at is whether or not there would even be any savings before before you go a step further. I think you have to analyze what insurance would cost if I were to insure each individual building as part of a condominium association, as compared to what each owner is paying right now. And bear in mind, if we were to do, if you went through all those steps and we were to insure as a condominium, the owners still then would have to purchase their own individual unit owner's policy. Basically, the way condominium statute works is the association would be responsible for insuring all of the common wall buildings, which would basically mean wall coverings, floor coverings, and ceiling coverings into the interior of the individual townhome would still be, and your contents would still be your own individual insuring responsibility. Taped, mudded, but unfinished sheetrock into the wall cavities, i.e. the roof, the structure, everything that is basically creates the shell of each individual townhome, that would be the insuring responsibility of the association. So
Right.
we would have to verify a cost for each individual owner, unit owner's policy, and verify a cost for insuring each building to compare apples to apples for you guys, which is my first thought is we need to do that before you guys, even take a step towards speaking with Dunlap Shipman and start paying attorney's fees.
Yeah, I'm just saying the devil's in the details. And so
Yep.
to compare like where Christine is and that building and so forth, that would probably be a decent comparison, although I haven't been in one of those. I've been in Brad and Christine's, but so I don't know how that is, but I know there's others that have got, total wind mitigation doors and windows, others that don't. There's different levels of finish out. So doors and windows are not inside the sheetrock. They're part of that. So I'm not saying we should look at it. Yes, because it just seems like there's a wide variety of how much each of us are paying. And that may have to do with individual policy about how we've got what deductible we've got set up and all that. But when I talk to some of our owners there, it'll be all over the board within $34,000 difference. So, well, my insurance is running this. Well, as I say, devil's in the details on that. So we should look at that. I don't want us to think it's just a simple process and we're all just alike and we've all got units just alike, because that's just not true.
I
So-
thoroughly agree, John.
Okay, great.
One other thing that, Jay, I wanted to ask about, and it has to do with it's been mentioned before at sometimes about roofs, and Alex just talked about their roof had to be replaced. And we've had some insurance agents in the last 2 or 3 years that have come out and said, well, your roof's got to be less than 20 years old, and that's enough. We've had other agents that come out and said, well, it's 25. We've had other agents that have said, well, if we have a wind mitigation report where your roof has been inspected for the ties and all that sort of stuff and is in good shape and has been inspected, and we have an inspection, then we're okay to keep going because they're metal roofs. So from different agents, we get a lot of feedback that's varied there. And the roofs are, some of them are less than others, but some of them are 20 years old and some of them are a little older than that. Some are toward 25. But so is there something about roofs that we ought to know going forward?
Yeah, that's really changed, John, to your point here in the last 3 to 5 years. Metal roofs are, from a longevity standpoint, as far as an insurer is concerned, are the best roofs to have on single family residential or multifamily residential, homes. And as a general rule, 20 to 25 is accurate, depending on the carrier. As it relates to what they consider to be roof life for a metal roof. 3-dimensional shingles now are almost like old single tabs used to be. I mean, they won't, you can buy a 30 or 45 year 3-dimensional shingle to go on your roof, and they're going to give you 15 years. Metal roofs, they still will give 20 to 25 years. And it's going to depend, each carrier is different. And that's probably why you're hearing different, responses from different agents, because some insurers that are probably insuring some of your buildings are with different insurers than others. And so each individual agent probably has a different requirement that they're hearing from their individual market. I would suggest any of your buildings that you don't have wind mitigation forms done on, you get them done. And make sure you're taking advantage of the credits that you can take advantage of. And I don't know exactly when your buildings were built, and straps and all of that stuff have a huge impact on, individual characteristics for uplift and that kind of stuff too. So it's important to have somebody come out, and you can go in and install clips and straps and that kind of stuff. And change the characteristics of an individual truss system and roofing system and save a ton of money. And I'm not saying they're cheap, but because nothing in construction is cheap when when you're welcome to the coast in the state of Florida, but it's worth the investment. And it will provide credits that you can help offset, eventual replacement of the roof itself with. So.
Okay. Mike, I think you had your hand up.
No, I'm
Mike
I'm
Barber.
good. Oh, Mike Barber.
Jay, hi, my name's Mike Barber. I got a question that I'm not sure you can answer, but just thought I'd throw it out there. As the values of our properties go up and down over the many years to keep up with the insurance limit. For an example, if I wanted to increase the limit from $750,000 to $1 million, would I assume that might be a 25% increase in premium, or is there some other factor that,
That would be a safe assumption. Yeah, it sure would. And there might be, individual carriers might have some kind of discount for, a certain value in there somewhere. So it's not, it's not an exact science, but typically speaking, in my world, we talk about rates per $100 of value. And so if your rate per $100 of value is the same at $1 million that it is at 750,000, then yeah, it's a 25% increase.
Okay. Thank you.
Yes, sir.
All right. Looks like we got about 3 questions left here on the additional questions, and then we'll be able to wrap it up.
All right. So my observation is that it takes a year. I think we kind of hit on that second one there as it relates to having cycle time for recovery. I mean, I think we beat that up, but most of the homes in your community don't have wind rated windows or doors. If there's a loss and we must rebuild, that goes back to what I just mentioned earlier as it relates to ordinance and law coverage. Your ordinance and law coverage is going to pick up any upgrades you have to make to doors and windows and or other, if the wiring's not up to code, if the plumbing's not up to code, if the roof's not up to code, all of that will be paid for in your ordinance and law coverage. If y'all remember, we talked about those earlier, coverages A, B, and C. I've talked with individuals who have experienced a loss due to hurricanes and some people say, hire a public adjuster. I think I hit on that too, quite frankly. My general thought process for all of my clients always is, let me do what I can do first before you pay somebody a portion of the proceeds that should come to you as part of a claim. Don't give up that percentage without knowing where your claim can land until you know you can't make any more progress. If your agent is doing a pretty decent job of representing you through the claim process, then let him advise you when it's time for a public adjuster. A lot of agents are adverse to public adjusters, period, because all they've ever known is the old public adjusters that walked around with Gucci sunglasses and gold chains and just argued with insurers and weren't professional and drove up insurance costs as a result of making fraudulent claims. That's not all that's out there anymore. There are professional public adjusters out there that have relationships with vice presidents and claims departments that can push claims forward and get things done that, quite frankly, most agents can't get done. And if there's a time for those, your agent should have some of those contacts and be able to advise you appropriately. If they feel like they're beating their head against a wall and you're not getting the settlement you deserve, your agent should be able to guide you to a public adjuster that can do that. And if they can't, and this doesn't ever work out for all of us together as a group, y'all call me and I'll hook you up with a public adjuster that is reputable, that you can work with and get your claim resolved if you feel like you're beating your head against a wall with your current agent. Any other questions?
Jay, this is Brad Pearson. Did you talk about the architectural drawings? So if the whole
I did not
gets...
talk about the architectural drawings, but that's a good question. The bottom line is, if your buildings are insured, let's just, as an example, Mike said a while ago, going to $1 million from 700. Let's just say they're all insured at $1 million right now. If they're all blown away and down to the slab total loss, and we don't have architectural drawings to show what was there previously, they've got the data to know what a total loss looks like. So they should write you a check for that total loss. And it's up to you to determine where you want to spend those proceeds. So if you want to, recreate what was there, you want to change what was there, then that's entirely up to you. I don't know that. I mean, it's an individual choice, quite frankly. But I don't think I would go to the trouble of trying to have an architect do a rendering of what existed, pre-loss. I would certainly, just as a responsible property owner, have tons of pictures of my individual unit from the, interior, exterior, all over the place, to verify for them what was there. They've got the square footage. They know what their insurance to value was. And if all the buildings are over 100% down or completely demolished and all we have slabs, then what we're going to have to argue about is what portion was done by tidal surge via, rising water, and what portion was done by wind. And they're going to have to, each one of those parties is going to have to come to the table and pay their proportionate share of the loss.
Well, I think the board and the community spend a lot of time talking about standards. I mean, we get crazy about what color the paint is and what the railings look like, and if people have towels on the railings. I can't imagine that process goes well with us.
Gotcha.
So how do you manage the expectations for something built to a certain standard using certain materials and an architectural design that is consistent within the community?
Agreed. Now, bear in mind, 99.9% of what I do is condominiums, not town homeowners associations. But usually in the bylaws, there is an insurance requirement and an insurance replacement section of the bylaws that addresses what the board's responsibilities are post loss as to what can be reconstructed for a condominium. Now, without having y'all's bylaws and being able to review it and take a look at it, I don't know what is currently in the bylaws and rules of, of your association.
Yeah. I don't think there's anything in there, actually. I mean,
Okay.
the board members probably have read this most recently, but I don't recall a standard for, other than saying it has to be the same materials and the same design. But, if everybody has their own architect, which I would imagine be the case if you have various insurers, there are going to be different solutions to each of those problems on either side of that firewall. I don't see how it works well.
It's an excellent point.
But to that end, even if we were a condo, let's just say that we got I'm sorry, this is Christine Pearson. If we got insured as a condo association, everything, values and everything got adjusted. Like, what happens if we were insured as a condo association? How do we get rebuilt?
Well, nothing really changes from that perspective unless there's a portion of the condo docs that references the plans. So,
but we don't have any, that's what I'm saying.
Right.
We don't have any drawings. We don't have any
Right.
plans. So how does
Right.
that get addressed?
well, as I said earlier, 99 point, if you were a condominium association, let's say as opposed to a town homeowners association, you were a condominium association currently, then to the prior point, it's probably going to be similar to what is in the current bylaws. And but it will also, if my memory serves me correctly, it would reference individual building plans or state simply as originally constructed. Now,
Yeah.
Do they have them or not have them? That's the question. I mean,
Yeah.
It doesn't change that dynamic to simply form a condominium association. If we don't have plans, we don't have plans.
Right.
But it'll probably say something similar, as originally designed.
So,
Okay.
so to that end, you would need not original, but at least updated drawings for that. Cause they're not,
I
They don't
would think
exist.
this would be really more applicable for an association like you guys, where you've got more of a garden style condominium association. I think it becomes more important that you have some type of drawings or some type of plans than it would for a 20-story, wind resistive condominium association.
Right.
Because those are going to be recorded, and the likelihood that building is completely destroyed as opposed, the footprint is almost always going to be there for that type structure, whereas this type structure can, each individual building can have a total loss at any point in time. Again, though, probably the likelihood of all of your buildings all being destroyed at one time, while that probability exists, it's probably 1 in a million, I would suspect. And there likely will always be some example of one of the buildings remaining that you can build from, that at least the shell of the structure and the square footage would be available. And photos, as I mentioned before, are important, pre-loss, to make sure that everybody understands what was there pre-loss, and then try and rebuild what was there pre-loss, post-loss.
So I think what, and this kind of ties together. I think Christine mentioned that, our neighbor, our wall neighbor has the same insurance policies that we have. When we connect with you next week, we'll give you that, see if it's worth pursuing this idea of a condo association, whether it's 9 buildings or 18. I understand John Hampton's points, and I think it valid, but if they're an individual building thing, so that if it does go down, you don't want half a roof done by one contractor and half a roof done by another. I think the Muhalls and Comers effectively got around that, or were able to make it work, luckily. But that's the first question that we need to clear. And then the second is to, if there is an advantage to that, exploring that question with the attorney. And then the other question to explore with the attorney is their advice on what we would do, or what the board would do should they decide to spend money with the attorney, I guess, is to see what do we have to do to make sure that we're in a position to provide some good direction to owners that have a complete loss, to build to the original standard. And are we in a good position for that with the bylaws that are in place? Or should we do something to prepare ourselves? Because one of the things that, I think, Alex has kind of hit on this, with their loss with the lightning strike, is it's taken a great deal of time. And if you have to get into an argument about what the house looks like, that's not gonna reduce cycle time.
You're exactly right.
No, and I'll just comment real quick on that. We did do the roof together. And the reason being is that because we had requested that they build all new trusses, right? And so their first suggestion was that they can sister the trusses with, supplemental studs to reinforce them to make the structure sound and complete. But Comers and I was kind of on board with that a little bit, because I knew that would shave off a lot of time, but Comer was really, really adamant about all new trusses. Well, it ended up that they did not even though we waited an extra, 6 weeks supposedly because of their complete inaction, and it was really rough with that roofer, but they did not even do what they said that they were going to do. So if I wanted to open up a lawsuit, I absolutely could against that roofing contractor, but you really do need to do the roof together at the same time, because those trusses should be built by the same company on, that span each side, to make sure that the dimensions are exactly proportionate, because there's no way you can really do the roof at 2 different times, because, all of the fasteners that have to go at the top, at the peaks, you have to do it together.
Yeah.
Two things back to what Brad's talking about. The only thing, Brad, that we have that kind of goes that direction is it gives some powers to the Architectural Review Committee, to see that some of that is maintained like the rest of the property. And so the Architectural Review Committee, while it's not very detailed, there is some there. That's how we get into what the Architectural Review Committee does now. And so now, if you go and we lose half our buildings or something like that, then then it's maybe to a whole nother point. I agree. I understand where you come from on that. So that's, you just asked about wonder what's in there. Well, the only thing that's in there has to do with the ARC and what their responsibilities are. The last thing I would say is that, Jay, my banking company in Arkansas, we've owned an insurance agency that does all forms of stuff, lots of P&C in about 5 states out of Arkansas. We don't do it in Florida and Arkansas, and we've done that for 30, 35 years, so forth. And so I can tell, and this is not just selfishly, because I've been on claim side. We just had tornadoes a year ago come through on our banks and so forth. But I can tell everybody what Jay said earlier. Your agent is a real key when the tough times come. And some agents will step in and really hold your hand and work for you. And some agents will not. They just say, well, you just need to call the carrier. And I had one of those in Florida that said, where we had a little bitty loss, and they said, well, you just need to deal with them. Well, I dropped them. I'm not going to deal with them. And so what Jay was saying earlier for all of you is having the right agent that will work for you and be your advocate and contact the people they know at the claims department and all that is probably the, outside of just basic coverage, is to me is the most important thing you can do. And that, I just give you that based on 35 years of being in the business of ownership of it. And it's just a real big deal. So I just echo what Jay said about that.
Thank you, John. You're absolutely correct. And it's shameful what agents have become, to be quite honest. I mean, it's, referring somebody to an 800 number after them having paid premiums to you for 10, 15, 20 years, whatever it is shameful. That's the opportunity you have to actually deliver on your promises, and you give them an 800 number. That doesn't fly around here. So.
Right.
Yep. Well, it has become obvious to me throughout this presentation how important an agent is to this process. It's been very educational. Jay, I got to say, I really appreciate you've been we've had you here for 2 hours and 45 minutes, and you have just given us so much to think about, so much to sort of digest here. But I really want to thank you. I mean, you did this as a courtesy to us. You've helped educate us, and I genuinely thank you for the time that you spent with us.
Absolutely. Absolutely.
Yep.
Y'all are working with a very reputable attorney as well. I want y'all to know that. I run into them. I bet they're on 30% of the associations I work with easily. And I have over 140 clients basically all over the state of Florida and into South Alabama. And they're good people over there. They do good work. And so I refer them, they refer me, and it's nice to know that y'all want to work with good people and that you see value in good people. So if I can ever help, you guys let me know. Send me the information. We'll do the machinations of trying to put together, what each individual unit owner policy would cost for each individual unit owner, as well as what the building coverage would cost as a condominium. And then that'll give you guys an idea if there's savings involved or not savings involved, and then whether you want to take another step in that regard and talking with Dunlop Shipman or not, and trying to figure out if it's worth pursuing either changing bylaws. I certainly would think there's some protections that you guys can put in place, even if you remain in the townhome space. There's some protections you can put in place that may not exist right now that weren't thought of when the association was originally designed, that maybe puts more control in the board's hands for the owners post any catastrophic loss. I would think, if you're capable of doing that at a minimum, then this exercise will have been worth it for you.
That sounds awesome. All right. Well, thank you, everyone that's been a part of this. And again, Jay, I can't say how much I appreciate the time you spent with us, and your experience and expertise has certainly shown through. Thank you.
Well, thank you. Well, thank you very much. Y'all have a great evening, and I look forward to receiving the information and get some numbers back to you guys.
All right.
Thank you.
Everyone have a
Thank you.
good evening.
Bye-bye.